Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it's Wednesday. We do have a little bit, well, some Fed speakers today, 10-year note auction. So today might be a little bit more active than yesterday. Market still seems to be pretty quiet, other than when concerns about regional banks collapsing come through. So we did have a pretty strong run yesterday. I'm glad that I got out with the profit on my swing. Let's just see how it goes today. All right, come over to the charts here. We are going, right? I'm like looking, you guys are usually, something's not right. Something's not right, because usually you guys are all up there. Okay, there's Rob. Good morning. Okay. I was like, where is it? Usually there's like 4 people saying good morning, like right at the beginning. Where'd you guys go? Did I screw up on something today? Anyways. Wait, today is the 7th, right? I don't know what's wrong. Okay, do the charts. To the charts. So, well, let's look at it here in the Treasuries, right? A lot of that big down day did get retraced on fears of regional banking woes. So we are a little bit higher, but not too much. They seem to be handling it okay. There is a little bit more downside action kind of starting overnight, so we'll see where the flows end up going today. In the S&P 500, it just continues to be positive. It was very, very range bound in yesterday's session, but now here in the overnight, you can see they're pushing it again. Although, you know, yesterday was like really strong trend pre-market, and then they got creamed. Maybe they're doing the same thing again today. Oil is it's doing okay, but I mean that's a retracement of that move. I don't know if that's all that significant. There sounds like that a peace deal may actually happen in Israel, so that probably could weigh on the price of oil. Gold and silver just kind of doing their thing, following the treasury correlations. Copper still struggling. The situation in China not really getting any better from what I can see. The dollar is a little bit weaker today. I think that below 104 is significant. So Bitcoin just kind of hovering around 4,300. Coming back over here. So yeah, we do have Fed's Kashkari speaking at the moment on CNBC. For some reason, he is like making the rounds. So he might say something significant here. So I would be on your toes. I did close this short yesterday. Did you not see that? Yeah, when that huge initial volume spike came through, I closed it. So I'm really happy with how I played that, because that would be a situation where I could be kind of a little iffy, you know. Okay, that might be the end of it. Let's see if it can, let's give it some room, etc. But I just bailed on it, and I think that was the best decision. It hasn't moved that much further from where it was because I bailed at like 03. So, well, I don't think that technically. So let me come back over here. Is it right here on this chart? So the trade would be breakout below this. And it also has to do with like what the moving averages are and everything. I'm not saying I have like a specific setup that I'm trading. What I'm trying to do is like look at the entire universe of momentum strategies, I guess you could say, and try to determine at which points, the volume really starts to come in. And I don't think that we completely hit that point. So I was taking a trade up in here based on the news in the expectation that it would eventually trigger the momentum strategies. But I don't think it actually did. We're still kind of on the edge. I think that if you get another day where we like close to a new low, that you might start to see it though. Then you might start to see it, and then you get one of those things where like for several days it's just sell, right? So, but it's the most typical. Oh, sorry, I'm even showing you over here. The most typical, like simplest form of a momentum strategy would be closing at a new 50-day low, and the moving averages being in the right configuration, which I actually think that they are here. Would be better if this was below, but it's usually like the 50. Well, actually, this is the 50, so it's usually like the 50-day is below the 100-day moving average or something like that, right? So you might not have the moving averages in the right place to make it happen either. I do kind of think, and this is kind of a new thing, so I'm still kind of getting the hang of seeing it, but all of this stuff right here, that looks to me like mean reversion coming in. This was mean reversion. Mean reversion trade worked. Then we got the news, and the news smacked it down. But you can see that the news is having a hard time getting it to really get low enough here to really trigger the momentum short. I don't think it's coming in. So I took a trade expecting that we would be able to get it, but we haven't yet. And then we had yesterday, which I think that the regional banking woes short circuits the trade, so we get out. This is basically how I played it. More broadly, though, that was insane volume. Were you there when we had that? It was like 18K just hit in the 5-year all at once in one spot. It was insane. So it was kind of funny because it was like you blink and you miss it sort of a thing, but it was one of the strongest single volume events I've ever seen. I can't remember the last time that I seen like 15,000 contracts just trade all at once, So I'm glad that in that situation it was enough to trigger my brain to be like, nah, you don't want to be in this anymore. I think almost all traders I follow 2 levels. Well, I don't think that so first of all, I think that daily levels are different from like intraday levels, right? That's the first thing. It's like, okay, so a lot of people will follow pivots. I backtest pivots, can't find anything to them. I backtest VWAPs and all of these other things, can't find anything to them. And it's funny because I try to like anticipate the arguments that people are going to make back and address them in my videos, and people still post them, you know. But like they'll say, oh, well, you know, you have to have this filter and this. They're not saying that you need this filter, but the end result of what they're saying is, oh, well, the reason you got the result that you did is because there's another filter that you need to include. And it's like, okay, the code is there. Put the filter on and prove it. Because there's like an infinite number of filters that you could potentially put on there, right? And I'll try them, but there's lots of things that I would try putting on there and like not show, right? But yeah, if you do the right filter, yeah. But that's all stuff that's based on like intraday things. And the larger conclusion that I've come to, I think that there's like different things going on here, right? I think one thing is that price itself on an intraday basis just doesn't actually have a lot of informational content to it because it's too random. It's too random. The order flow can in some situations, but the price in and of itself, a single instrument's price, it's like almost useless. And I come to that conclusion by trying literally millions of intraday strategies where you're trying to find an edge just using a single time price series. I'm not sure that you can do it. The market just seems to be too efficient. And we know some things about the market and proven behaviors about it and everything that I think back up that idea that you're extremely unlikely to find any kind of an edge just using price on an intraday basis, right? But I think that there's this other problem, which is the intraday time frame itself, right? If you have a situation where there's news or you know you've got something that's going to drive flow for the near term, then you can absolutely make predictive trades. I think it's very, very difficult for a retail trader to be informed enough to really do that and be successful with it on a day-by-day basis. But you know, you can come into a market environment that's favorable and you knock it out of the park and it can be worth it, right? When you go to higher time frame, then it's kind of a different, then I think that you run into a different situation because there are relatively large funds out there that do these sorts of things. It's just it's daily levels. It's daily levels, right? So like previous day's low, I pay attention to that. I don't try and make a prediction based on the level, because I think what most retail traders try to do is they say, if we close below the if we close below this for X many 1 minute bars, then I'm gonna go short or something like that. And again, like I've backtested those sorts of things, doesn't seem to work. Okay, but then when I go and I do like, okay, if the close is a new 50-day low and the 50-day moving average is below the 100-day moving average, then I go short. And that I see yield results over a 20-year time period. It's not perfect. It's not perfect. I mean, there are downsides to that strategy in the behavior, but it's generally a profitable strategy. And the whole thing is that it's back to, is the problem there actually just the daily time frame, right? Because you have to hold it for, if you're holding it for months and months on end, then it's a different thing than holding it just for the day, right? So there's like some fundamental problems, I think, with these kinds of like technical setups on an intraday basis. You get what I mean? I remember Grady saying something similar too in regards to levels holding better on longer time frames. Yeah. But this is where Grady's context thing kind of comes into play, is that I think that you as a person, if you are informed, have the ability to come in and say, this situation is such that it's going to trigger the momentum strategies or it's not, right? Before, I think we were really far away. Like if I come back to this chart, let's just say, for the sake of argument, that this little like spike back up didn't happen. Let's just say that when that non-farms hit, that we were like here, then you most certainly would have breached it, and we would probably be down to this 200-day moving average, if not below, right? So, but in this situation, there had enough room that by the time we got to the support levels, they were already kind of, I think that the sellers were already kind of exhausted, right? But you as a person have the ability to kind of make those kinds of judgment calls and be effective at it in a way that you can't backtest, because you have to be able to factor in all of the nuance of, the news, the thing that actually triggered that original sell, right? And vice versa, we have, the ability to understand that there's still this regional banking risk out there too. To be like, well, maybe that provides some support. Maybe we don't necessarily just want to be all in on the short. The point of trading with the Dom is not to see quote price action. I think that's incidental. So this is where I think it's really useful to you to trace the etymology of these things. Is etymology the correct word? Basically, you look at, why did this style of trading come about? Like, what is the origin of it? How did that become popular? And because I think that a lot of what happens in the retail trading world is they just take something that somebody else says and take it for granted. And a lot of the time, the person that is telling them that, they don't know themselves. And so you're just following something that has absolutely no basis in reality, right? But the other thing that happens is that the retail traders will go and they'll take something, but they fundamentally misunderstand, what it was even doing, right? Like in the 90s, in the 90s, early 2000s, DOM trading was a way that retail traders made real money by being the market makers. They took the market making role in the market away from the floor locals, right? And when you're doing that style of trading, essentially the main thing that you're doing, and I'm just giving you a broad overview of how does scalping work. It's mostly through arbitrage. You are looking at the price of related assets and what they are doing and what your instrument is doing in relation to them, and making decisions about, when there's a divergence between them, what's going on, and ergo, what should my best bid and ask be based on that. So if I put a bid at 0.4 I'm doing that by saying, well, based on what the 5-year and the 10-year and the Japanese yen and the dollar index are all doing, this is my best place to have a bid. And if somebody hits me on that bid, I'm happy to take it, because I know based on that arbitrage that I should be able to get filled on the other side, or would be relatively easy for me to get filled on the other side. And with all that in mind, based on the inventory that I have and the order flows that I'm seeing, I might want to expand that spread to account for informed traders. Okay, that's broadly what market making is. Okay, so when you think about pure DOM trading, that is really has its origins in market making. Okay, and when you're market making, you are not the informed trader. Your edge is being at the front of the queue, understanding your instrument the best, being really fast with the correlations and all that sort of thing, right? That's your edge, and your edge is not necessarily being informed. But if you're a human, then you do want to add being informed on top of it, right? And then you can decide, okay, I'm only going to market make on one side because what I know about the flows suggests that we're going to move up, right? So I'm only going to market make on the bid side, and I'm just sitting there with my bid and hoping that I get filled. And, you know, if there's a big trend up and I don't already have some inventory on, then it's kind of like, oh well, because you're not going to get filled then. But like that's how that thing works, right? Okay. That doesn't work anymore. Not as a human. I'm not saying it's impossible, but I'm just saying that's not very fertile ground anymore because the robots beat you to the punch every time. That's just the reality of it. Okay. So that's the etymology of it. Now we can kind of look at it and it's like, okay, well, that doesn't mean that we just completely throw that away, right? There's a lot of value to be gleaned from the DOM. It's just that we're going to have to keep that in mind with a bunch of other things, and like my real edge is probably going to have to come from somewhere else, right? In my case, the true edge, when I do have a trade that works really well for me, I think that my true edge tends to be being better informed than other market participants. You know what I mean? It's the same thing with the momentum. So, momentum is a strategy. It's been around since the 80s, where on a daily basis, there are trends that can be gleaned from this. And if you trade that over a large portfolio of assets, and the universe of assets that you're trading is carefully selected, and that's really the edges kind of there, then you get something that performs really well. It maybe slightly underperforms the market in most average years, but then when like crazy things are going on, it outperforms, and so over the long run, it outperforms the S&P 500. That's a portfolio level strategy, right? It's not an intraday strategy. And all these retail traders have been reading about these traders like the turtle traders and all this momentum stuff and this Jack Swagger books and everything. And then they try to apply it to intraday basis when it doesn't have any applicability to the intraday basis. Right? So you got to, once you trace the etymology of it, you can say, okay, well, I understand why they say the point of trading with the DOM is to not see, quote, price action, to not care what these things are happening. Well, yeah, that was if you were a robot, but you're not a robot. So really, you're doing something else and you're just incorporating the DOM into it, right? So I think that a lot of that just kind of comes down to helping retail traders realize why they've been told what they've been told and why it's not necessarily useful in the way that they thought it was, right? Like I've from everything that I've seen, going in and looking at a chart and seeing a chart pattern and then trying to predict what is going to happen after that chart pattern is practically useless. Trying to do that on an intraday basis is practically useless. I didn't always believe that. Okay, I there was a time where I thought that I had a lot of success from just reading those patterns on an intraday basis. I won freaking contests doing that. Okay, but over time, and especially once I started to test it empirically, I discovered that really was just random luck. So I'm going to approach levels differently from other people, right? I don't try and say like the futures trader 71 way of going about things, which is like, okay, here's all of these levels and here's the scenario that I think is going to play out, and then hopefully one of those scenarios do play out, and then if I see the order flow kind of corresponding with it, then I take the trade. I don't think that works. I when I backtest those setups, like what I think that is a misapplication of statistics. They're going and they're saying, well, when X happens, there's a good percentage chance that X happens. I think it's a misapplication of the statistics. Most of the statistics that they're pulling out there have to do with volatility. So they would be great trades if you were like trading options, maybe. But trying to predict what it's going to do at a level, I think is really, really, really difficult. But there are price levels in the market, sure, that do have some meaning because there are really big strategies out there that will be triggered by those particular levels. And the levels that I am familiar with are going to be like your daily highs and lows, 50-day new high, new lows, 50, 100, 200-day moving averages, and then volatility levels. If there's anything that's like on an intraday basis that matters, I think that it is the pricing out like expected, or what is the word? Expected versus realized volatility. Like if there's something on an intraday basis that seems to matter to like indexes, it's that. But I think trying to take a purist approach in DOM versus charts thing is dumb. I mean, I think that you should try and incorporate everything that you can that actually has evidence behind it. That's the big caveat, right? Is that we love to incorporate tons of things that I don't really think are backed up by evidence. You should check Discord. Well, I read almost every message that comes through on Discord. Okay. And it's kind of a hard thing, right? Because I will come in and, some new person comes in and they want to talk about technical analysis and everything. And, I have my way of kind of coming in and trying to help them realize what's going on. I mean, the issue here, like the broader problem that I face is like when I'm here on the stream and I'm talking to you guys about it, I can kind of take it from that direction because we're a really close knit group. You guys understand a lot of the same information that I do. And so we can play it that way, right? And then somebody comes in and because we're all mostly on the same page, they pick up on it and learn very, very quickly. But in a place like the Discord where, activity is pretty sporadic and the one person that's brand new come in and can just dominate the conversation and everything. If I come in and I just, try and browbeat them on it, it doesn't work very well, right? So you kind of have to, I think you kind of have to do this way of helping them realize these things on their own, right? Like when I spoke to the traders at the bank, and at that time, I still believed in the technical analysis. And they didn't tell me, oh, that's stupid, you're stupid, that, if you try and use that. They just said, well, okay, if you think that it works. Takes a lot of data for you to know. So just so that you know, it takes a lot. So don't make any conclusions until you've really been doing it for a really long time. But, here's what I do. And here's what we know. And then once you go through what they know, all of a sudden it's like, oh yeah, I was stupid. Didn't know anything. So I think that we have a real challenge in trying to teach retail traders these things because the culture is against you, the culture is against you. And I mean, the really big issue is that there's always going to be people out there claiming like huge profits and taking big risks and making a bunch of money that are going to be more attractive to the beginner, right? Versus what we're saying, which is like, you can combine all of this information that we know that is proven about the markets and has empirical backing, and still lose as a retail trader, because that's just the way that the game is right now. This is not a very attractive message to most beginners, right? You know, he was talking about not seeing patterns in the chart, but when price gets too far. Well, right, but again, I've tested those things, and it doesn't work out that way. It's a misunderstanding of statistics, right? Volume is effectively four-way. There's no specific inconsistent. That's true. Well, I would argue that it's six-way. I think that there are 6 forces that you're seeing in the order flow, and you know, you kind of have to combine all of those things together to get a feel about what's going on at the current time, right? Yeah. If you count polling, then 6, yes. I know that seems like a minor distinction, but when you get into some of the models of order flow and things like that, it ends up being a very significant insight. So the polling is an extremely important force behind why things go to where they do. Anyways, so like misunderstanding of statistics. What they're doing is they're saying, okay, if we are yay standard deviations away from the previous day's point of control, or yay standard deviations away from today's VWAP, then there is a 60% chance that we will touch the VWAP again that day, or we'll touch that previous day's point of control. Okay, so you can go and you can do those statistics, and they're generally correct. One problem is often you don't use enough data. So like, have 5 years of data first. Do that on 5 years of data. Okay, but then assuming that it shows up that way in 5 years of data, the problem is that statistic is not a trade, right? Because when we're talking about a trade, we have to factor in the timing of it and how far it goes before it actually gets to where you want it to go, and what your stop is going to be, and all of those sorts of things, right? And what I'm saying is, when you combine that into a trade, you're going to find that it's not a profitable trade. That like yeah, most of the time it will go down into there, but the times that it doesn't, you lose so much that you don't make money on it. So I would be basically what I'm saying is that I would be extremely wary of any kind of quote statistic about the market that isn't a statistic about like an actual trading strategy. That is like, here is the performance of that strategy. Is basically the way that I play it. You guys, statistic, whatever, great. Okay, back test it. Most of these people that are sharing you these statistics, the reason that they're focused on those statistics is because they don't have the ability to do the back test. There's too many games being played on stacking and pulling. You'll never know. You have to consider arbitrageurs that are constantly responding to other markets. Yeah, well, so there's a lot of noise in order flow, right? And how do you filter that noise out? Well, I think one of the things is that if you have an edge that tells you which way the future orders are going to be, that really helps you filter out the order flow. Really does, right? there are things that happen that are like well outside of just randomness though too, right? Like yesterday when we saw 15,000 contracts trade all at once in the 5-year, that, you know, that to me was like, that's not a mistake. I have a pretty good idea of why that might be happening, so I want out, you know? And, you know, any one stack or poll is, to me, it's just like a tea leaf, right? It's just, okay, like, how is the order flow going at this particular time? That kind of tells me a little bit about what the current liquidity is. And then I can use those current liquidity conditions in combination with my anticipation of what the future order flow is going to be to predict what's going to happen and then decide if there's a trade worth taking. People will try to explain what happens with stacking and pulling use a logic that assumes those traders are trading outright. They are most likely not. You have to be able to look way beyond that. Yeah, that's true. I think even these like these market making strategies, for instance, that are trading in ZN, I'm sure that there are like high frequency trading algorithms out there that are just trading the single instrument. I think that those ones are probably more likely to be aggressors. But as my understanding is that the vast majority of the liquidity is like spreading and hedging and so forth. So even if they trade well, in that particular situation, what happened was they traded up very, very quickly, and there was a 15K, and it didn't hold them back at all. They just blew right through it. That was somebody that really, really wanted to buy. Really, really wanted to buy. They are buying this morning again, so at this point, I think that we need to pull up our chart, our stock chart. Yeah, I think that they kind of came close to trading back into it, but they never really got below it, did they? NYCB is on the downturn. That was a pretty big spike overnight, though. There was some really big upside action that more than canceled out the downside action that we saw yesterday. Oh, no, wait, that's not the downside action we saw yesterday. That's just the overnight. Okay. So they maybe overnight retraced about half of yesterday's downside. You get more bang for your buck if you focus on order flow? Maybe, I don't know. My argument for why should you study order flow is that you are really not seeing what's going on unless you're looking at the order flow. But just looking at price is not enough information to understand what's going on in that instrument. Because I put it that way because I don't have any explicit setup that where I have found a consistent high probability sort of setup with order flow on its own. At least not one that is like kind of mid-term time frame that makes sense for a human trader. The things that I know of that, I would say I'm pretty confident are edges that you can take advantage of with order flow are things that you have to be a HFT to trade. Right. So I just don't think that you're really going to understand the market very well if you don't study order flow. So that's why my argument is that everybody that is going to trade on an intraday time frame should understand order flow. And I think that even people that want to trade higher time frames, that there's very valuable insights that come from understanding that stuff. Like I'm glad that I spent all of this time working on the day trading aspect of it, in so much that it kind of forced me to have to learn those things and find the empirical data about it. So and I think that if I ever do go to like running a momentum strategy fund or something like that, I think that it's a really valuable thing for me, because I think that there are a lot of portfolio managers out there that don't understand those things and make foolish decisions because of it. You're gonna lead a horse to water, but you can't force it to drink. I feel like you're already going down a path that I disagree with, though, right? Because to me, that's like saying, okay, like I'm gonna show you something that I think works, and then you have to trust me that it works, right? Empirical data. I really don't think that you can get away from it, because the reason why the vast majority of retail traders have no chance and will never really see any kind of lasting success with futures trading is because their entire way of being is finding something that somebody else has said and hoping that it works for them. Putting a bunch of things out there, kind of seeing how it goes for a few days, and then basing your strategy off of that. And when you really understand the statistics and the way that the market is and the amount of data that you need, you realize that those are all just they're gonna fail you. You have to have a real empirical approach that incorporates enough data. Otherwise, you're almost guaranteed to waste your time. Okay, often you present facts of empirical data, and yet you still get a lot of horses that refuse to drink. That's true. But why is that, right? I think it's because, you've already been conditioned, right? You've been conditioned to believe certain things about technical analysis. It goes against, man. So this may be like a huge segue that into politics, but something that was that I'm seeing happen right now is that the Democrat Party, has a certain view of the world and a certain view of Donald Trump in particular, right? And everything that they see in the world is interpreted through that lens, right? So any time that you say or present anything that contradicts that understanding of the world, they just reject it, right? You can't actually talk facts about it, right? So the thing that came up yesterday was this fake electors scheme. Well, if you hate Donald Trump, then this fake electors scheme was, a fraud perpetuated on the American people to try and undermine the elections and yada, yada, yada. But if you actually look at it from like a legal context, I think the case against it isn't very good. There's actually a pretty decent amount of legal precedence for like alternative elector slates and things like that. And the only way that you can make that a crime is if you can show that it was a fraud, which is to say that their intent was to mislead people and lie to them, which how are you going to prove that in a court of law? This is not, they don't have a very good case, right? But you can't say any of that. You can't even they won't even let you get into that legal argument because their minds are already made up about something, right? And humans are tribal. You have your religion, essentially, and anybody coming in that's saying something different from that is not from your tribe and shouldn't be trusted. There's like real biological reasons why we're like that, right? And that works against you massively. It works against you massively when it comes to scientific endeavors and trading in particular. Because essentially what you're doing is you're limiting yourself to always what the consensus is, which will always be the least fertile ground in trading. Get what I'm saying? So I've kind of come to my own conclusion that for most people, you can't actually convince them. That the best that you can do is try and attract new people and get people that haven't already been tainted by the rest of the trading world, you know? Or people that are extremely open. Is trading worth it from your point of view? It depends. It depends. Okay. So like, if you're a 19-year-old kid and your idea is that you want to be a day trader for a living and you're going to go out and learn everything about trading, save up your own money and then build it up and become a millionaire from that, then it's not worth it. You will not be successful with it. It will ruin your life. You'll have no success. Okay. If you love markets, you watch markets and read market news, even if you're not anticipating making any money from it, okay? And you come in and it's a hobby and you're risking very, very small amounts of money, then it can be very, very, very valuable. Because one, it's entertainment for you, and I think that it's something that really, really pushes your own personal development. So there's value in it from that. You will be able to make better financial decisions in the rest of your life. So for instance, I don't think that I would be able to be in this house without the things that I knew from the market and the interest rate market and the housing market. Okay. There's lots of people right now that cannot afford to have to buy a home and make more money than I do. I make pretty good bank right now. But there are these people in these big cities that make like double what I do, and they say they can't afford a home, right? Well, I knew going all the way back to like 2013 that a housing crunch was coming. They were talking about it all the time on the financial news. I wish I could go back and like find those stories because I remember that was when I was with my ex, but I remember coming home like every day and being like, we have to do everything that you can't do this, you can't do that. Everything that we do has to be focused on getting into a house as quickly as possible. Right? So from that alone, that's hundreds of thousands of dollars. And here I am over here on the micro treasuries, like risking $10 at a time. Right? Is it worth it? Yeah, it was worth it. It was worth it, right? And there's still the possibility that something in the market changes that's in my favor and allows me to kind of like get at the forefront of that. Maybe I have an opportunity to offer hedge fund type strategies to regular people. That would, be lucrative for me, and it would be valuable for all of the people that are able to get into the fund, right? So there can be big value behind it, right? It's just that like what most people are trying to do is never going to work, right? What most people are trying to do is a bad trade, right? For me, you look at this, I get a great community, I learn tons of things, I enjoy what I'm doing, it provides me other opportunities outside of it. So when you look at my situation and you combine it all together, it's a great trade. It's an amazing trade for me. But for the person that doesn't really have a whole lot else and they're trying to, turn that into a living, like that's a bad trade. Like trying to do that, like by definition, makes you a bad trader, right? And I think that part of the real edge, I guess you could say, or like the real difficulty is looking at your own unique circumstances and finding a way to turn this into a worthwhile venture for you. I've had some good scalps at your volatility projection levels. I think there really is something to the volatility projection, right? Because you're looking at what the market is pricing for volatility and then taking trades at those points. Not many companies survive. It's the same as trading. Many people open a new company and it does not last more than a few years. Is the first time watching. What market are you following? So most of my trades are placed in the Treasury market. So we're watching interest rates. But like that's value, interest rates is kind of like the basis of everything else in the markets, right? So what happens to us in Treasuries eventually comes around and affects everybody else, right? So, and in turn, we're kind of watching everything else too. So even if you don't want to trade Treasuries, you can still gain a lot of value from watching the stream. I'd say the Treasuries are pretty quiet this morning again, though. I thought, with what happened last week and everything, that we would still get some decent trade, but because of the ways this has specifically been playing out, it's been pretty tight in the 10 years. So no, we're keeping an eye on this New York Community Bank Corp. I'm concerned that when the S&P 500 opens, that continues to sell. Had a good hour of questions and discussion today. I haven't really had the time to come into Twitter and so forth. Let's see what we got here. Wow. Binance delisted Monero? That, I think, is a significant development. Let's come and take a look at that. Well, what I'm reading on Twitter here says down nearly 40% on the news, but okay, it's been a few days. Whew. Okay, well, on the longer term chart, that's not like the end of the world. That's pretty ugly. I mean, Monero in my mind is like a key cryptocurrency because it's the one that really guarantees like anonymity and stuff like that, right? So that is a little scary for the rest of the cryptocurrency industry, I think. So Bitfinex was commenting on this and was saying it's going to be amazing when Tron and Tron Tethers get delisted because it has built-in money laundering system just like Monero. So what they say is probably not going to happen. Binance is kind of like all invested in that. Some stuff from Taleb. You know, Taleb has not been posting as much useful information lately. The overall quality on Twitter has gone down, unfortunately. That reminds me, are we going to get the interview with Putin today? Tomorrow? It is going to be interesting, right? I don't know what you're going to ask him. What's going to happen in that interview that could be a big deal? I think that it's most likely that it comes out and you watch it and it's kind of not that interesting. But so many people are upset about it and everything that they're going to make fireworks about it, you know? So I'm interested to see people's reaction to it. Tucker put on a Ukrainian kill. Well, really? You know what I thought? So I saw this thing yesterday. Look, I really don't like Tucker Carlson's take on Ukraine. I don't. Okay, but I think that the Warhawks are being a little unfair to him on this one, right? So there's it's unconscionable to interview Putin, and then I saw this picture of 4 different prominent journalists that have all interviewed Putin. I was like, oh yeah, okay. It was kind of. What do you think is it's, and I'm not sure what it is they think is going to happen that's going to be so harmful. It's just. I think it's a little silly. I'm sure that he will ask him milquetoast questions and Putin will give the same kind of responses and say the same sorts of things that he's been saying for the last 3 years, and it'll be uneventful. But there's all these people in the media acting like it's the end of the world. It's kind of the modus operandi, though, these days, don't you think? Yeah, so the thing I was thinking about this morning while I was in the shower, because I had this argument with people on, so there was this post on Reddit where this guy was talking about democracy. It was what was it? It was the Willy Wonka meme, right? Because Trump was arguing, it's undemocratic to remove him from the ballot. And they're like, well, what you did on January 6th was undemocratic. And I was like, well, okay, this meme is trying to make the case that some groups of people in the United States support democracy and other people don't. And that's not true. everybody believes in democracy, is arguing in favor of democracy, claims to favor democracy, and is doing what they believe is appropriate and okay under democracy as they understand it. Okay, even the people that are trying to take Trump off of the ballot, they believe in democracy. They just think that the Constitution provides a way for them to, disqualify him. They're wrong. It won't hold up in the Supreme Court, but they're just doing what their understanding is they're not anti-democratic per se. So I was arguing with them on this, and I was looking through this. One of the things because the thing is that nobody wanted to argue that point. They only wanted to argue that Donald Trump was trying to perpetuate a fraud on the American people, which was kind of funny. Like, they changed the subject to, well, everything that Trump did, it wasn't that he thought that the election was stolen. That's all just a facade for him trying to maintain his power. Right. I think if I really look at his behavior, that it really is the case that he truly believes the election was stolen from him. That is, I think, so abundantly clear when you really look at it. If his only concern was staying in power and using any means necessary to do so, he would have done very different things. Okay, like what kind of a coup do you do? Like, you don't carry weapons or anything, right? This is the people that own all of the weapons. They don't bring the weapons to their coup, right? Like, the thing that's scary to me about that whole January 6th situation is that if their intention was to overthrow the government, I think that they might have been successful with it. They weren't trying for it. So they want to argue about that. And one of the things that they were coming down to was, okay, what is the crime, right? And then that's why they were bringing up like the fake electors and those sorts of things. And it's like, well, that having an alternative slate of electors is not a crime, right? The Democrats did it when Donald Trump won. When Donald Trump won, they had like this alternate slate of electors. Okay, it's not illegal. And this person was like, well, if it's not illegal, then why have so many people been charged about it? And I was just like, I literally, when I read that on my phone in the shower, I was just laughed. It was like, people are not paying attention, do not understand what's going on. And I don't think that Republicans really understand. I don't think that Republicans really understand the extent of what the new Democrat strategy actually is, right? Because here's the real Democrat strategy is weaponize the legal system. It's weaponizing the legal system. If you're going to elect Donald Trump, you're going to need a lot more lawyers than the Republican Party has, right? Like, you have this situation where he's got like 4 different legal cases, and like he's having trouble even finding legal representation. That's like a really big problem if you're going to make him your nominee and if he's going to become president. Because if he becomes president, it's just going to be non-stop legal shenanigans all day. And it's not going to stop when Donald Trump is no longer president. It's going to be, they're going to be doing that to every Republican and on every issue. And Republicans tend not to become lawyers. You're going to need a lot more lawyers, man. You're going to need a lot more lawyers. And that is the mode of operation. Is you use the media to get everybody upset about things, and then you create these legal cases as kind of like a what is the word that what is the confirmation bias. To feed the confirmation bias, you have the legal cases. lawfare. Yep, exactly. I don't think that the Republican Party is realizing it yet. It's interesting to watch like this the border bill, because now all of the conservatives are saying, oh, the border bill was basically designed to fail so that they could then just try and pass a straight up or down yes no bill on Ukraine funding. Maybe. But all of the Republicans are kind of starting to turn on Mitch McConnell now. Right. I hope everything's okay, Jiwi. All these conversations make it seem like Iceland might be one of the best places in the world. I'm sure at some point that even Iceland won't be free. I mean, I think the interesting thing about it, part of the reason why I bring that conversation up is because conservatives are like preparing for a civil war, right? Conservatives are convinced, like the polling suggests that conservatives really think there is going to be a civil war, right? And I don't think that that's even remotely in the cards. That what is really going on is that there's going to be a legal war, and they are not prepared for that, right? The Democrats are going to fight where they have the advantage, and that is with lawyers, not with guns. and a big challenge for conservatives is that the reality is that most of us are disconnected from it. Like, most people just go about their lives and don't have to know anything about what's going on with politics. It's only when you get into the illegal immigration issue where it starts to actually impact certain people's lives. And it seems that impact has not been quite enough to really get people upset about it. Yeah, it was interesting to me that the Treasuries came all the way back down. New York Bank Corp is not really recovered per se. But I don't really see really very good, strong order flow in either direction on this. So I think that I'm maybe paying a little bit more attention to that than I normally would, just because 04 was where it got out yesterday. New Zealand. I guess what I'm saying is you don't need to move to a different country. Okay. I don't think that we're talking about anything that's really going to impact your daily life anytime soon. But if you care about politics and the way that the politics are going, I see some things that don't bode well for Republicans. I like strategic wise, because if the election was held today, at least the polling that we have, I don't completely trust it. I wouldn't trust any polling until after Labor Day, but we have some polling to suggest that Donald Trump is going to win. That's why I'm saying, okay, like, this is the game that you're going to end up playing if Donald Trump wins. You're not really prepared for it, I don't think. The New York Community Bank book starts with chapter 13. This is going back. So, we didn't talk about this yesterday afterwards, but we should have, because I asked, we had a poll that said, will we make it to March? So, I was saying, will the Fed blink and have to do something about this regional banking thing before March comes? And most of you said that we will make it to March, but I don't think we will. The problem that I see is that there is reflexivity in this trade. So when I say reflexivity, what I'm saying is you make a move and that has a feedback loop that makes it easier for it to just continue in that direction. And that as long as that particular market dynamic is intact, it will just keep going in direct contradiction to what's actually going on and all of the odds and everything else, right? Oh, that was a really fast spike back up. And there's community bank falling, right? So you know, think of it like, because George Soros was the guy that kind of coined the term reflexivity. He talks about it in his book. Okay, so think of it from the perspective of if it was George Soros, right? He can come in, he can short New York Community Bank, and regardless of what's actually going on, he can short Community Bank, causes the treasuries to spike, causes the rest of the index to go down, gets everybody concerned about that thing, and then that causes them to come over and sell New York Community Bank, and that makes it even easier for him to just come in and sell it again, right? So when you get that kind of reflexivity in a trade, it will continue until something breaks the reflexivity. That's my understanding of it. Which means that at some point, the Federal Reserve will be forced to address this issue in some manner. The question is just, will they be forced to address it before March? And the pace that it's going, I kind of think, yes, they will. They might not have to do a whole lot, so it might like end up being like not a big deal and like we all forget about it, but I think that they're going to be forced to do something. I think that they're going to have to like bring back the BTFP or like something similar. I got long at 04, offered at 08, and I couldn't move it fast enough. Wow. What just happened? Nothing. No news that I know of. Ooh, okay, so just 8 seconds ago, New York Community Bank halted for volatility after falling 6.9%. There wasn't news. It's just New York Community Bank is selling. Wow, +8. Now, I'm going to be really interesting to see how the Treasuries act here during the halt, right? Is it going to like, so they halted it, is it going to open back up and then, you know, plummet again? Yeah, well, okay, it was an incredible spike across the board. It was. I'm just saying there was not a like a news headline. It was, as far as I can tell, selling in New York Community Bank just off of the open, and the Treasuries reacting very strongly to it. You know, this does kind of make the story that we were talking about yesterday. Lucas, were you the one that was interested in that? Yeah. I think you were. I kind of makes that story a little bit more interesting. Well, maybe not this specific story, but like the whole basis trade is interesting, right? Because so the headline that we got yesterday was that a rule was being passed that basically would force a lot of these hedge funds and so forth that are trading the basis in the treasury market, which basically means you go long the bond and you sell the futures and you pocket the difference from the futures, that they will be they will have to register as dealers. Now, I think it makes a lot of sense if the majority of the volume coming in through this market is now down to these basis traders, then you know, I do think that it's a good idea for them to be registered and all of that sort of stuff. I don't buy the argument that Zero Hedge is making that it will cause them to not want to do that trade anymore. I think that they'll just take it in stride. But there is a lot of people that come in here and go short the treasuries because of this basis trade, right? And the way that you do the trade is, you know, when it comes down to the settlement date, the price of the bond and the price of the future should be the same. The basis will go to zero. So you just stay in that trade, essentially, right? If you can just hang on and you stay in that trade, then you almost always make money, right? Problem is it's got a fat tail, because there's going to be this situation where the treasuries move up really fast and you get stopped out of the trade. You don't have enough margin, you don't have enough assets anymore to hold on to the trade, and you're forced out of it, right? So what would be the sort of situation that would force you out of the basis? A regional banking crisis, maybe? Right? When you see this kind of volume come through, I think that there's probably some basis traders in that puking it. Because, like, come on, this went from, what was it? This was like 20,000 contracts, just like that. It's insane. I don't, now I really wish that I could trade this, but, I've been more risk adverse lasely. But even if I had a really big account, I know better. When it starts getting like this, you just get thrashed, man. So I really need to fight the urge to try and come in and take a live trade off of this. But it's wild stuff, right? You can always find a new item that fits. Interest rates will probably be low in 14 days. If they, at this rate, the Federal Reserve is going to come in and do something tomorrow, right? Because this New York, so the headline, I think, was it overnight? I don't remember when it was, but the last headline that I saw in New York Community Bank was that Moody's downgraded their credit rating. The result from yesterday was like 80% of you said we'll make it to March. But you might have misunderstood my question. So I think that the Federal Reserve will make a policy change to help out the regional banking situation before March. That's my prediction. I don't know if that's a buy or a sell on treasuries. Right? Kind of like when the Federal Reserve did something before, that was kind of what started this rally in treasuries to begin with. But it may just be a nothing burger for the actual price of treasuries, and then maybe they just sell back down to where we were. So it's hard for me to make any kind of like a swing trade off of that, right? Okay, well, did they open it back up again? They did. Okay, they just opened it back up. Oh, jeez. And it... Okay. I was going to say, often the way that this works is they unhalt it and then it just plunges more and then they immediately halt it again, right? TLT led the move. There's definitely... so look at the 5 versus 30-year spread, dude. You see that? So it is absolutely coming in on the short end of the curve. Buy 100 shares of New York Community Bank? You know what I was thinking yesterday? And maybe this isn't as crazy of an idea as I thought, but why not buy their bonds? Is that really a crazy, stupid idea to buy their bonds? Because, like, honestly, if you let New York Community Bank go bankrupt, then I think the market is screwed, right? So I think you have an easy call of too big to fail here. And you have some protection. You have more protection buying the bond than you do buying the stock, right? So would this be a case where you can just buy the bonds and get an easy yield on it? JP Morgan will gobble. Well, that could happen too. You're not wrong. I kind of think though, that if they force, well, let's not say force, but you know, if you let the community banks get eaten up by JP Morgan, I think that has the same kind of chilling effect on the market, right? That you're basically saying like regional banking is not sustainable anymore. That would be a major problem if that's the conclusion that we came to. Because then there's a bunch of other banks that have to be sold off to. Right? So if I was at the Federal Reserve, I would be sitting here saying, we need to make sure that Community Bank Corp survives this. Well, I'm not going to say that the Fed won't let the market go down. I mean, the thing in this case, there is not the same degree of systemic risk with these regional banks as there was like during the 2008 crisis, right? I think that people's kind of, you know, we have that trauma encoded in the back of our head. And so you're immediately going to feel like, you know, this is just like 2008, right? I think it's much more limited to these specific companies, right? So I don't think that the Federal Reserve really has to do a lot to fix the situation. It's just that the thing that they did before, you know, they gave them a year, didn't really seem to fix the problem. Banks just kind of started abusing it. So what can they actually do is the real question. But I think that they'll step in and do something. It's really funny for me to see the Treasuries doing that and the S&P 500 just sitting there. S&P 500 perfectly fine with it. Hey, look, they're coming back up above where they were halted. That's not bad. Not bad. Maybe you could take a short. Man, Uzi, 04 to 08, but it went twice as far. I don't know if riding one of those are actually worth it. I've had them work out, but I've had them destroy me too, and I don't, those ones scare me too much now. You know, I don't know if those are actually worth playing. I've kind of been thinking I'm just going to let this volatility play out and before I start making any kind of real moves. Yep, there is a 10-year auction today. It's so yesterday, the Treasuries spiked really hard when the auction came out after all this. Took some shorts on ZB. Yeah, but what price did you get? Because if you got like above 26, then that's good job, my friend. Nothing is more entertaining to me on Reddit than when people think that they're informed and they're clearly not. Did they just halt it on the upside now too? Kinda looks like it to me. So a thread on Reddit on r/day trading. New to day trading, you're doing it wrong. I'm not going to read the post, but the post was basically like, yeah, you're going to fail. Like you're being really naive. But I mean, that is basically the situation for pretty much everybody that comes into the space, right? Okay, well, I'm seeing pretty decent volume on selling at the other side. See, if we're going to go and buy New York Community Bank Corp bonds, now's the time. I don't know, even know if I have access to that stuff. Let's see. Fixed income bonds and CDs. Will it let me search for them? Okay. Let me try looking up at QSIP. No. I don't think I do. Because when I just try and search for it on their thing, and so then I come to the quote page, there's, you know, hoping to see like some sort of a link that would be like the bonds, but I don't see that. Well, let's just look for junk bonds. I wish I could just search for the issuer. You were way behind on this. Well, yeah, I mean, it kind of like moved. I could have traded it, I suppose, because I could have been sitting there when it said we were down towards the lows. And I'm like, well, I think I'm paying attention to this area just because it's back to like where it was, you know? But I could have made the speculation that there will be another, you know, panic today and buy it. We weren't aware of that. But it's been going on for like 3 days now, right? Did it Tuesday? Did it Monday? Did it Friday to some extent? Well, actually, I don't think on Friday, but it was doing it last week too, right? Yeah, I don't know. Yeah, there's going to be a way to search by the issuer. See, there's face value is $1,000, so we could totally do it, man. But it's just this. I don't think this QSIP is right. No, I'm not. Still short. I took that off yesterday. Not that it would have mattered for what you do. Always benefits to be informed, but it is a little disconcerting that the bond market is reacting so strongly to it, and the S&P 500 is kind of ignoring it, right? Pitch ratings, maybe. No. That just shows that they downgraded the issuer, but maybe their website itself? What's the platform that I was always using? Bond buyer, maybe? That's not it. Think that the GPT might tell me. Okay, let's go ask ChatGPT. I don't know if it will understand my question. Oh, it did give me a number. Okay. Okay, let's try it. I'm hyper skeptical. What have you come through for me, ChatGPT? Oh my gosh, it's correct. Ah! Okay, that's funny. Well, it's searched through Bing. It's searched through Bing. I should be searching Bing. Okay, here we go. QSIP, yada, 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 yada. I can buy it. Oh, there's a big buy button there. Okay. Okay. Third party price 16.9. What? I do not understand what I am looking at here. Let me show you. Okay, so down here, this is what one bond equals $1,000 price value. I don't think I have $1,000 right now to put into it, but I'd have to sell something else rather. But it's like the price that it's giving is like, what? I don't know if now is the time to buy the bonds though, right? Like it's so the cash avail. Oh, that's me. Is that me? Do I actually? Maybe I do have enough. But I think that if I say 1, you have to use a limit price. But what price are they gonna give me? Wait, let's come back over here. No, that's not it. There's a video over here. Dun, 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 dun. Price and performance. What does this mean? Third party price. Third party price depicts the securities price formulated from a third party vendor's proprietary pricing methodology to establish this model price. A host of factors such as recent trade activity, size, timing, and yields of comparable bonds are used. In the case of a comparable bond, the vendor assigns a fair market yield to the security, then extrapolates a representative price based on the fair market yield assigned. In many cases, this modeled price provides price discovery and transparency for bonds that may not have traded for days, months, or even years. Understandably, in scenarios where a security hasn't traded recently, attempting to accurately predict the market price can be a challenging endeavor. Nevertheless, the vendor prices bonds on a daily basis. Given the nature of the model pricing provided, it is not accurate to characterize the pricing as a closing price or to suggest that the price is based on a specific recent trading activity. Okay, but why is it what does 16.9 actually mean? That is what I'm getting at. Like, what is this? Say New York Community Bank Corp Incorporated depository short shares each represent blah 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 blah. So is that not actually? I don't know. I don't know. You have a good channel? Thank you. I don't feel like it's that great at the moment. I'm kind of like, what's going on? I just want to know how much you would be paying if you. But I think that price is like the price of the stock. Well, the stock is 389. That makes sense. I guess you could just buy the stock. I think buying the bond sounds more interesting. They haven't updated the rating yet over here. No call protection. Thoroughly taxable. Minimum investment amount 25. Wow, the treasuries are coming back with vengeance, man. Oof. Like I said, these ones, I don't know if they're worth trading because they're just so wild. Issuer information, coupon type. Yeah, the other thing that really irks me is that, like, there's not a way to come in and say, okay, what are some other bonds from this issuer? Okay. Wait. What I was looking at, let's see here, 64944. Yeah, 64944. Those are preferred shares. So I don't think that's what I want. I think that I want this other one. I found another one. It was on a page that I had looked at on the Fitch rate page. And I just needed to scroll down a little bit further. Aha. Now that looks like a bond. Ah, yes. 2028 bonds, a coupon 8%. Who wants to get paid 8% per year to bag hold New York Community Bank, huh? So $300 million worth that they issued. That's actually not that much. That was the only one that I see on this list too. Those only, so 800 million in debt. Okay, anyways. I gotta make sure that they're not like callable or any of that kind of. I don't know if callable makes a difference in this particular situation, but What you got here, Octavius? When a bank fails. Oh, yeah. So I was gonna say, I don't. If you buy their bonds, I think you're still screwed, right? With the way that I've seen this go in the past, I think that if you buy the bonds and the bank like goes under, that you're still screwed. But I guess I'm just trying to determine. Okay, sure. Price and performance. Price 75. What does that mean? You think that it's cents on the dollar, 75 cents on the dollar? So you think that if I buy one, well, let's see here. Did it say the issue size on here? Oh, it pays quarterly. I like that. Oh, there's call protection. No. Conditional call. Well, let's just see if I click buy. Buy one bond. And I say that I'm willing to buy it at 75. Review order. Did it not like... Oh, yeah, it wants to see this. They don't have any, so you can't buy it. Boo! All that work. All of that work, and when I try to go and look at it, they say, nah, you can't buy that one. Thanks, Fidelity. Thanks, Fidelity. In bankruptcy, that's likely. Yeah, you're totally right. In bankruptcy, you're going to lose money. So the thing that I'm trying to determine, well, okay, so we'll just make some assumptions, okay? Let's assume that it is indeed, you're buying it for 75 cents on the dollar, and that they're 1,000, which means that you're buying it for $750. Okay. So if you hold it to maturity, you will get the, and it's callable in what, 2028? Not callable, but it expires in 2028. So let's say 4 years. Um, 4 years times 4. Well, actually, no, just 4 years times. Oh man, I forget how to do all this shit, man. Coupon is 8332. Do they have a yield to maturity on here? Doesn't look like they do. Maybe. The result is double. What do you mean by that? Maybe I find a calculator. Current bond trading price, 750. Face value, years to maturity, 4. Annual coupon rate, 8.33. Quarterly. Okay. That's a little bit more like it. So it says that the yield to maturity is 17%. Let's come back over here. Daily. 7. Let's say 7. Let's say that we're at 4. Let's say that we're at 3.5. That's a little bit lower than where we are, but let's say there you go, 3.5. You could double your money with the stock. So it doesn't really make sense to buy the bonds. You would make 17% overall. Well, 17% per year. Whereas this one, you might be able to like double your money in like a few weeks. Right? Assuming they live on in their current form, yes. I mean, I really wonder, like, are there people out there buying the dip on this thing? Usually, you know, the thing that I think is kind of funny is that in a situation like this, you get tons of retail traders trying to buy the dip, and you don't hear about it until like several weeks later when like the price of it goes lower and they all lose money or something like that, right? Are there options on this? Well, hold up. What are there options on this? I bet you there are. That might be fun. Oh yeah. Oh hey, they changed their options screen. Okay. Whoa. Let's trade March, shall we? Okay, March. March is, what are these? The last change, Delta Strike 3. Ugh. So I don't like that it's every dollar, but okay. So if we buy... Wait, how can there only be 6? Oh, because these are calls. Well, yeah, even still, that doesn't make much sense. Lots of puts. Lots of people buying puts. All those index holders and institutional NYCB holders probably have in their investment guidelines that they can't hold junk securities. So managers take their time to sell when they own a ton. Okay, this is a good point. Good observation. So I'm just kind of trying to figure out here. How do you do it? Or do I click it here and it shows up? As if I buy this. Ah, there we go. 25% probability of profit. Come on, there's got to be more. The trade analyzer's got to give me more than that. Show me the graph. Return to classic view, maybe? Oh, that's so bad. Oh, those aren't the ones that we wanted to look at anyway, so we want March. Okay. No, go back. Is that the P&L calculator? Maybe. So it calls for March. This one right here. Ah, so it has to be above $4 to even make money. That doesn't look that worth it. Current MES price 5,00875-ish. Yep. It'd have to go above 4.5, which, I mean, it's not that big of a move. Sure doesn't look very great right now. I should go back to a 1 minute chart on that. Okay. $4.5. So in order to make my money back, it would need to go to 6, essentially. So that doesn't look particularly great. Basically the implied volatility of them is way too high right now for that to be really valuable. But maybe we could let's try their thing here again. Which symbol next? I want it to go up. Covered call. Yeah, I don't really like the choices here. Let's go out to April. Ooh, there's April earnings. Okay, sure. July. That's it. Option play strategies. No, thank you. I don't like their new view. I like the little chart. I should just open up Thinkorswim, man. I should just open up Thinkorswim. But I was gonna ask, how much are they when you go out of the money? Well, let's come back to, let's do the July ones. Let's do those ones and those ones. Okay. Not very good. I suppose you could do 3 to 4s, right? Nope, that one doesn't make much sense. What if we bought that one and sold where are we at again? Sure, 7, 9, fine. Sold this one. Okay, so you get net 55. So the probability of profit isn't very good, but it would have to come. So there's a 3 to 1 basically. So here is a call vertical spread that gives you 3 to 1. It's out of the money. So understand it's out of the money. So in order for you to make money, basically, you need to expire above 7. Or in order for this to all work out, you want it to be above 7. Which is right there. Which is basically like where this all started. That's a tough pull, right? So I don't know if trying to buy the dip on this one really makes sense. You'd have to do, okay, well let me do degenerate stuff. Let's do let's do the degenerate strategy, okay? Puts. July puts. 4 puts. So. Oh, that's interesting. Wait, why is the max loss 250? I unselected those other ones, right? Is that estimated max loss like that because there's only so far that it could go down further? Are there some like really out there puts? 50% probability. 57. Okay, sure. Okay, so let's do this one because people are selling this one. Okay, so you're risking 280 to make 120. Ooh, there's another little shift there. Wait a second. Ooh, ooh, whoa, 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 whoa! Something's happening. There must be some news. There's got to be something hitting the market here. 'Cause that was something else. It looks like it's positive for it. I'm gonna scalp this. I think that a piece of positive news may have hit the market, but come on, you ain't gonna film me at 08? Really? Really? Big draw in crude. Yeah, this is 7 minutes ago, but it's a good thing to point out. We are seeing prices in oil rise a little bit. I'm gonna pull this thing back up and close it because I'm not. Even selling the options isn't that attractive. Sometimes you can, the implied volatility on them is so high and you can sell them and just, you'll make a decent amount just from things calming down. But it doesn't look like that's the case on this one. The price is too low. So I think you could have fun with them as a retail trader over there, but I don't think that the risk reward and probability and everything is really there for you. Well, this one is saying that I got exactly the wrong spot, right? Now, U.S. Bank, New York Community Bank Corp is still falling. Why are you focused on regional banks suddenly? Because that seems to be driving the treasuries right now. Okay, well. This is not one that I'm gonna let hold on for very long, so I'm just gonna take the quick loss on that. I'm sim logged the same place you're sim sure. Well, I came in and I saw New York Community Bank Corp up, and I saw like the spike in the treasuries initially spiking up and then coming down, and I thought, okay, like maybe we're gonna move down, but it's not. I didn't get it. I thought at this point I would know what's going on and stuff, but don't, and it wasn't going my direction, so I just gotta get out of it, right? Yeah, it surely wasn't intentional. Oh, you're trading it off the dollar index? That's interesting. The dollar did move there too. Dollar moving down, worth buying the treasuries? Because right now they're oppositely correlated. Yeah. It may as of yet, come out, but I think something like that, it should keep going your way right away, right? I don't think on a situation like that I should really be holding on to it for very long. Or onto losses for very long. If it's like, I heard X news, I think that is going to ultimately cause the treasuries to sell. Yeah, sometimes it takes the market a little bit of time to figure it out and yada yada. But there was like a big spike of volume. I think it's going this way and it's not, then I don't think you do that. But you know what? I don't think that I looked that one over well enough either, because it was a buying spike in ZN. It was I just looked at the price change and I didn't really take the time to look it over. So I think in retrospect now I can say, like, not only was it a quick loss, but I think it was just a bad trade overall. Like, it was not in line with the way that I actually want to trade, but I was just working too fast. Are people still worried about inverted yield curve? I mean, I don't know. I mean, people talk about it a lot, but I never really saw anything in the flows that made me think that was like a huge tilt to the market. Yeah. I really want to know why that spike came through, though. It'll really make you think that, like, okay. New York Community Bank in talks to offload mortgage risk, plans to sell RV loans. So why does that result in the amount of volume that we saw? That's curious, because I'm not quite sure what to make of that, to be honest with you. I mean, if they were able to offload the mortgage risk to a bigger bank, that would be a positive thing, wouldn't it? So isn't that good for them? Well, maybe it means they're in such dire straits and there's no way that they're going to be able to sell it. And so the next discussion is, how do we break this thing up and sell the whole bank, right? How much of the next discussion after this is, how much does JP Morgan get, right? diminishes earnings ability. Okay. Yeah, I mean, that's probably right that it would decrease their long-term earnings potential at the in exchange for less drawdown right now. But if the market knowing that hurts their stock a lot, then there's no way that they can sell it anyways, right? Yeah, the bank buys the good part and the taxpayer buys. Yep. Yep. Market is like a 5-year-old when stuff like this. I really am quite surprised at the aggressiveness of the volume in the treasuries when this stuff happens. Yes, because this is still kind of looking like I don't know if this really has many long-term consequences. Like I think that either the Federal Reserve is going to come in and do something, or this bank is going to get broken up. And yeah, probably a lot of other regional banks will get broken up too. But the S&P 500 doesn't care. So I'm just not seeing how this really affects the bonds to the degree that the market that the volume is saying, I'm not quite seeing it. If it was really like, if I really thought this is the Armageddon, this is gonna lead to the like the bear market was coming, then I would just buy it. I would just buy the treasuries, see how far they go, and hope that you get another thing like in COVID. It's wild to think back on COVID because that, I kind of had the same kind of opinion on COVID though, right? At the very beginning, I was like, I don't know if this is hurting the economy as much as they think it is. But that was when I thought that it was just 2 weeks to flatten the curve, and it didn't end up being that, right? No, I don't. Well, actually, I do. I do own a pretty large quantity of garlic coin. I don't really consider it like holding bags, but because I didn't have to pay any money to get it, but I guess it's a bag. Yeah, so if garlic coin ever takes off, I'm a multimillionaire, but otherwise, no, I have tried to divest myself from crypto as much as possible. Man, Elon Musk sure is happy that X is the most downloaded app of any kind on the Apple charts. I kind of feel like, well, if that's the best you got right now, I don't know if that's too good. I'm a little mad at that, how I reacted to that spike, thinking, I think I should sell it here. Because I'm looking at it now and I'm like, oh, that was so dumb. That was so absolutely the wrong read. And you know what that is. Like, they bought the treasury. There's a huge, huge spike of volume in the treasuries. Why are Republican states in favor of Texas seating when it'll give presidential elections less Republican? Well, I think that if it came to that it wouldn't just be Texas. That's on Reddit. I need to just stop visiting this website. It sucks. From r/UFOs, I stopped talking to my wife about UFOs every day. Okay. Trump asks us to support Bud Light. What? Okay, wait, when was this? February 6th? So yesterday in the afternoon. This can't be real. What Bud Light ad was a mistake of epic proportions, and for that, a very big price was paid. But Anheuser-Busch is not a woke company. But I can give you plenty that are. I am building a list and might release it for the world to see. Why not? The radical left does it viciously to well-run conservative companies and people. Very nasty, but it's the way they play the game. On the other hand, Anheuser-Busch spends $700 million a year with our great farmers, employs 65,000 Americans, which 1,500 are veterans, and is a founding corporate partner of Folds of Honor, which provides scholarships for families of fallen servicemen. They've raised over $30 million and given 44,000 scholarships. Anheuser-Busch is a great American brand that deserves a second chance. What do you think? Perhaps instead we should be going after those companies that are looking to destroy America. I can't believe that he posted this. Yeah, he's long Bud. I think so. I'm just like, what? Because my opinion is no, you messed up. Now you pay the price. And the price is there's no second chances. You go bankrupt. That's the way that I think it should be. The right is such an effing... It is. It really is. Like, I don't know how you solve this problem, but to me, it keeps coming back to this thing that, like, the right is not actually interested in the institutions of power, let's say. They're not interested in getting involved in government. They're not interested in working for government agencies or having a career in government at all. And they don't want to understand those systems, and it puts the Republican Party at a real disadvantage. Frankly, a lot of the opinions in the Republican Party are the result of just complete ignorance. Like, I really think that their opinion on, like, that we should abolish the Federal Reserve is one based on complete ignorance. But, you know, there's a lot of things that they're really, really right about, and they are just completely inept because they just don't understand what's going on. And it's kind of this weird case where, like, the only person that the right thinks has any chance of doing what they want to do, you know, has a lot of really big problems, you know? And this is just like the perfect kind of an example of it, where it's like, you know, Trump is really great at a lot of things, but ultimately he failed, right? He did not drain the swamp. He went head to head with the swamp and got destroyed, basically. And now you're egging for a rematch. I think you're gonna get destroyed. I think you might win the election, but I don't think you're gonna accomplish anything once you're in. But I get to just be a casual observer, apparently, you know. What was my original trade at? Like, could I have, like, held through all of that? 11.5. Oh, I could have. That would be kind of like going my way now at this point. Wait, what the fuck? That's not right. So I'm coming over here and looking at the trade. Was this maybe it's oh, there it is. There it is. Okay, never mind. I had the date range incorrect. It was 09. It was 09, so not quite. The 11.5 was one that I'd taken a long time ago that I made a little bit of money off. It's literally broken. It is. Well, but you know, the political parties are realigning anyways, right? So I think at some point you will get like a more effective realignment. Oh, broke, yeah. Well, okay. Let's talk about that for a second. The fundraising for the Republican Party has been abysmal. Part of it is that Republicans don't want to donate to their party because they They don't think that the party actually supports them or Donald Trump or any of that sort of stuff, right? But I also think that part of it is that the person that's in charge at the Republican National Committee is a complete dunce too, right? So, change the leadership, get somebody that Donald Trump supports, that money to just come flowing in. So I don't think that it's actually an intractable problem. It's just like, I think that you have to have like Nikki Haley lose in South Carolina and drop out, and then the Reaper comes for, all of the Republican Party leadership, because at that point it's, there's no plan B at that point, right? It's just you're all in Trump, and then things will probably shift. Man, look at that dollar coming back with vengeance. Okay, so I want to come back here to Reddit though and see what r/conservative has to say about Trump asking people to support Bud Light. Amazing what an appropriately sized campaign donation will yield. Did they donate to him? I think it'd have to be more than that. How much did they pay him to post this sponsored post? Yeah, that's gonna be no. So none of the guys on the Reddit are going along with it. By the way, when the not the Supreme Court, but when the court decision came in that Trump does not have presidential immunity, and he was like raging about the presidential immunity thing, all of the Republicans were like, well, that's the right decision. That would really be a bad thing if they said that the president has full immunity, right? So he doesn't really even have the full support of the party on many actually key things. I don't remember seeing anything about that, and so now I'm coming over here to Patriots Top Win. Ted Cruz doubles down on McConnell resignation. That would be sure interesting to me if that happened, because I am kind of sick of McConnell now at this point. I don't see anything on there about. They're just ignoring it. That's funny. Because the way that forum works, you need to be all in on drinking Bud Light now because Trump told you to do so. But they're just ignoring it. If I were that old, I'd just resign and take... As old as Donald Trump? Oh, McConnell, yeah. Yes. Well, but I'm actually, I'm not sure that they actually would. Because the thing is at that age, like, how much of it is McConnell actually doing, right? Like, he has staff and stuff that are actually, like, really running the show. And all you got to do is, like, show up and stuff. And, like, you're already used to it. And, you don't want them to lose their jobs. Like, there's a reason why it goes that way. You have any speculations on upcoming interest rates this year? Do you think an election would have... Oh, I think so. Well, but I think that the interest rates that we have right now are probably too low. I'd say a sizable chunk of the country is actually run by interns. Like, I think there's... Yeah. Well, let's not... I mean... let's not say interns, but, like, their chief of staff... Yeah, and the older they get, the more that chief of staff is the one actually running the show, right? Especially for these people that don't have any. So there are some people in Congress that have been in Congress for years and years and years, and they don't even have like a good spot on the committees. Like they don't have any real leadership positions in there. What are you effing doing? Because the committees is kind of the place where it's like, okay, you have the opportunity now to become the expert on this specific niche subject, like the budget or finance or whatever it is, right? But when you're doing such a terrible job that you don't even get those kind of committee assignments, then what are you doing? I don't think you're actually doing anything. I think that you're just letting your staff decide what you're going to vote on based on who pays you the most, or promises you the most. Glitch, McConnell. But my issue with Mitch McConnell, here's the thing with Mitch McConnell. Okay. He's a smart cookie. Okay. He understands politics. He does. He understands politics. He knows how to play it. He's an effective strategy guy. So probably the most effective strategy guy in the Republican Party by a long shot. Okay, and I think that there was many situations where, we did better than we would have without him. Okay, but the problem is that he's not actually on board, right? He does not actually believe in any of the things that the Republican Party base does. The Republican Party base thinks that the Ukraine war is, Biden's personal adventure in geopolitics and is a complete disaster, and that the border is like a huge deal. And McConnell is more of a traditional war hawk, thinks that it's vitally important to American interests to fund the Ukraine war, and wants to just kick the can down the road on the immigration issue again. He doesn't care because he gets plenty of kickbacks from it, and it's worked out well so far. So did he kind of like undermine that whole deal by making a border deal that was just like completely untenable so that you could get a clear clear up or down vote on the Ukraine war thing? That's exactly the way that McConnell will play it. So that's him being smart and all of that. It's just that he's not actually playing for our team. He's playing for his own team, right? So I think that Republicans are fed up with it. And Ted Cruz coming out and saying that McConnell should resign, I think that's a significant thing. That I would still put the chances of McConnell resigning as pretty low, but that is something that has the potential to turn into something more. If you can hide out in the Senate and day trade on insider information, yeah. Well, but you can do that. Like, that's what you would just sit in on those committees. Like, a lot of the time they are open to the public. So, if rates are too low, what do you think would be a good range for the interest rate at the moment? Well, I think that we should be like at least above 4.2. I think we should at least be above 4.2. But the market seems to think that there's like a financial crisis on the horizon that's going to force the Federal Reserve to cut rates or something like that. So, yeah, I'm not seeing really anything from on Patriots.win about I don't think that Republicans are going to come back. I really don't. I honestly wonder, like, how many Republicans out there are really like all in on Trump? How many of them are all in on Trump versus how many of them are voting for Trump because they don't like any of the other guys and they think that he's going to win anyways. You know? The last mile of inflation to 2% is going to keep rate cuts at bay. Yeah. I mean, the data that I'm looking at kind of suggests that, yeah, we did see inflation fall back a ton, but now you're going to see a resurgence in some of those core components. And as long as the S&P 500 continues to rally now above 5,000, it's going to be very, very difficult for you to cut interest rates. They would say, and that's why this thing that Kashkari has been saying, I think is really super important. Because why would you cut interest rates? Well, because monetary policy is restrictive, and so you need to cut back to a neutral rate, otherwise you're going to create a recession. And you kind of have to start doing that before the recession starts to happen. Otherwise, it's too late, and that turns into a self-perpetuating cycle that causes it to happen, right? Okay, well, if the neutral rate has gone up and we're not actually that restrictive, then that puts the kibosh on the whole thing, right? That kind of says, actually, maybe what we've got right now is the neutral rate, and we just need to stay here. Yeah, S&P at all-time highs. Let's cut rates. I just don't see it happening. This whole time I've said, right, the idea of them cutting in March doesn't make sense to me. I honestly think that a large portion of it was not people actually making bets that they would cut in March, but just people extrapolating based on past markets and overreading the action in the treasuries that was being caused by momentum trading and the Silicon Valley Bank disaster. I'm gonna come over and check a few. Oh, yeah, I didn't realize it's time for us to get going. Biden, the only reason the border is not secure is Donald Trump. That's false. He fixed it. You changed it. The reason the border is not secure is because of presidential orders that Biden made at the beginning of his administration. He told us that he was going to do them. They were part of his promises. We said that this would happen. Trying to blame it on Donald Trump is so absolutely ridiculous. I just can't believe that you would think that even lying about that would help you, because we all know what happens. Good grief. But on the conservative, kind of more general audience conservative stuff, I'm not seeing anything about McConnell should resign. So maybe he needs more time. A lot of investment professionals only know 0%. Yeah. I mean, pretty much you have to be older than me to know a time when there was actually real interest rates. Because I entered in right at the 2008 crisis. And it wasn't even really that high after the 2001 thing too. Ooh, are we actually going to get snow today? It is starting to turn into snow out there. Okay, well, let's set today's title as Regional Bank fears dominate Treasuries for another day. Talked about a lot of different things today. I think my mind's all over the place, but man, I want this thing that's drive, because ultimately I think that interest rates should be higher and that the Treasury should be selling. And so I'm kind of looking at this thing as like a minor distraction, and I don't want to be involved in it, but I could be wrong, right? This could be the opportunity. We need to buy it now, and it's just going to go crazy, right? We'll see. It's going to keep things interesting for a while, I think, because this is going to take days, not weeks, to resolve itself. I'd say it's doing okay today. Hey, I will see you